Hello everybody. In this video, I am going to give an update on my portfolio and show you all of my positions. Let's get started. Right now, my portfolio is worth $151,413.62. In the past year, I am down $19,918.89. Year to date, I'm down $114,383.25 for 2026. The market is not actually open today. Today is Sunday night, but it says I'm down around $6,000. I wanted to make this video just to show you guys exactly where my portfolio is right now at this current time, even though the market is not open today. Let's go over my positions. I am selling Amazon $195 covered calls. These expire March 27. My return, $2,100. I'm selling Google $290 covered calls. These expire March 27. My return, $3,588. I'm selling Robinhood $100 covered calls. These expire March 27. My return, $1,121. I am selling Robinhood $70 puts. These expire March 27. My return, $1. I'm selling SoFi $24 covered calls. These expire March 27. My return, $318. I'm selling SoFi $16 puts. These expire March 27. My return, $140. And I am selling Verizon $48 puts. These expire April 17. My return, I'm down $105. For my stocks, I have 1,900 shares of Robinhood. Robinhood is at $69.42. My average cost, $116.75. My return, I am down $89,923.39. I have 400 shares of Google. Google is at $297.10. My average cost, $306.59. My return, I am down $3,794. I have 500 shares of Amazon. Amazon is at $203.86. My average cost, $206.91. My return, I am down $1,522.50. I have 5,300 shares of SoFi. SoFi is at $16.69. My average cost, $5.77. My return, $57,895.75. My buying power is $38,417.94. This is a margin account. My margin buffer is 5.22%. My margin buffer indicates how close I am to a margin call. The higher my buffer percentage, the lower my risk of getting a margin call. Since my buffer is at 5.22%, I am pretty close to getting margin called. However, I'm not quite there yet, but 5.22%, that is actually pretty close. So hopefully I don't get margin called in the next week, but I'll keep a close eye on this. Once my positions are freed up, then I'm going to get more buying power, and then I'll have less chance of getting margin called, just because if a lot of my positions get called away, I'll simply have less margin used, and then as a consequence, my margin buffer will increase. But for now, I'm pretty close to getting margin called because I'm at 5% buffer. As for how much margin I'm using, my margin used is $277,907.38. My annual interest rate is 4.50%, and the daily interest that I am paying is $34.61, and I'm using $1,000 of margin interest free. So most of my positions expire this upcoming Friday. Right now is the 22nd and these expire on the 27th, so 5 days from now. And a lot of them are very close. Amazon, I chose a strike price of $195 and Amazon's at $203. I would actually prefer Amazon to stay above $195 and then I could just make money from the covered calls. But if it does go below $195 on Friday, then I'll end up having to keep my shares of Amazon, which I'm fine with that too. Google, this one's also could go either way. I chose a strike price of $290. Right now, Google's at $297, so it could stay above $290 at expiration, and then I get my shares of Google called away, or it could go below $290 at expiration, and I keep my shares of Google. Either way, I'll be happy. Robinhood, this one is not close. I chose a strike price of $100 for my covered calls, and Robinhood is at $69.43. So I highly doubt it's going to go above $100 in the next week. So I think I'm just going to get money from the covered calls. This one is very close. I chose a strike price of $70 for my Robinhood puts that I'm selling, and Robinhood is at $69.43. I would prefer it if Robinhood stayed above $70 at expiration, so I could just make money from the cash secured puts, and then if I want to, I'll just simply buy the shares outright later on. But either way is okay. SoFi, this one is not close. I chose a strike price of $24. Right now, SoFi is at $16.69, so I highly doubt it's going to hit $24 a share within the next week. This one is close. My SoFi puts that I'm selling, I chose a strike price of $16 and SoFi is at $16.69. So if it goes below $16 at expiration, then I'm gonna have to own shares of SoFi, which is not the end of the world, but I would prefer to just have SoFi be above $16 at expiration, so then I could just get the money that I got from selling these puts, and then later on just buying SoFi shares. And then this one does not expire on the 27th, so I have more time on this. But I think this one I would prefer Verizon to stay above $48 at expiration. And that's it. That's all I have to talk about. So I went over where my portfolio is at, as well as my positions, and what I would prefer to happen within the next week when these expire on Friday. I hope you guys enjoyed watching me go over my portfolio as well as my positions. If you guys like this type of content, please make sure to like and subscribe, and I'll keep on making more of these videos. Thank you so much for watching, and I'll see you guys next time. Bye.